Welcome to TradeTheMBI.com. This is John. This report is for the 23rd, Tuesday, and what a way to start the week. I mean, we had talked about this before, we were looking for the orange to move above the meeting of the green and the cyan, and when that rejected, we knew from the other day that, wasn't going to be pretty. Not to mention, we already knew from the dip below the red line that we were going to retrace the lows right down here, what was that low? 2712. Not to mention the 36 was going to be revisited here with the algo spread, because obviously you got to pass that to get to the low. So we've once again filled back these positive extremes from way back here in July. And through the magic of television, I just shrunk the chart real fast to show that you get this dip below the red line at 2600, more likely when you have that kind of wick. Usually you get somewhere in the open range of it, which would be closer to the 2635. That's still a long way from where we are right here. Any indication that we're going to do that? Not at this particular time. I mean, the reality is we don't have a reset of steel or anything, so we're in a significant downturn. But from a daily standpoint, that can change kind of fast, because as you can see, the last time we ended up with the buy turnaround there, and then boom, the green was over the cyan here. We ended up with that nice little upcharge. But in downturns, you can get that steel remaining up for quite a while and get quite significant ranges within it before it resets. So we'll see it on the 50K or other ranges much earlier than that. And we can zoom back into where we're at right now. And there's significant decline in the post market, which is the easiest place for them to run the stops and clear out everything. A lot of people have ignored my comments about the European contagion and its serious implications for U.S. markets and what it means. Plus, on the global scene, you have U.S. pulling out of the nuclear agreements with Russia, which means more of an arms war. I know Russia's planning to release that hypersonic weapon. Of course, that throws out just about everything. And this is the power of technology will always change that dynamic going forward. Now, the NASDAQ, you can see here, a similar situation, no different. We had already had the orange cross over the green back at the peak up here at the 50% range, breaking the 23. Again, needs to revisit the 0. How long it will take to do that. The euro had already softened just a little bit, retraced that dip below the red line, so that happened a couple of days ago. It's been satisfied. It's been bouncing. It's been holding up quite well. Looks like there was some intervention, because the reality is it's a very precarious situation with what happens with the euro and that, and it can go south very fast to where it's really not something they can contain, and it just becomes a question on if there's ever a run on the banks in any of these particular countries like you had in Greece. One thing, if it happens in Italy, whole nother world, and it can bring things to quite a bit of a halt in at least the southern part of Europe. I don't know that it would be that huge a contagion throughout, but it certainly would have a major drag on a lot of things. So we'll constantly keep an eye on it. The euro pretty much gives us that clue. TLT, and again, we expect this 113 to be broken and move down even lower as the expectation for continuation. There still tries to be an argument that the U.S. economy isn't doing well, that things are near collapse, but doesn't seem to match what we see from the data. So kind of always throw the hyperbole of so-called news out the window and look at just what we're seeing, and the market really determines where things are at. I think we might be seeing some more realignment here in the next week of political uncertainty, particularly if things become more opaque, meaning they're just really not able to determine, and I think which direction things are going to fall out at, and that's kind of what it looks like at this particular point, and I think that's going to create a lot more turmoil in the marketplace. You obviously have the Saudi thing with the oil, it's still playing around with there, and I think this is where gold, that deleverage from the oil moving back into actual physical metal, is going to have a play. And we saw it start back over here as we dipped down, and that took place right before the pop there. We were getting the crossover signals, and then boom, it exploded upon that gap open. Futures was a lot easier to see. Alright, so let's shrink this down a little bit and take a look at what happened to the day, because it was really a very nice day. We had a nice little pop-up run. In fact, I forgot, I'm short from the 80 range, that first peak. So when we came up through here, we ended up with a decent DOC spread that had a nice split to it coming through, and then we ended up with a secondary snake right there once it was in there, and that led to a nice little capitulation collapse, and then we started to reach that super oversold with the red, and then finally the orange dips below. That happened right over here, and we fell back, but then we created a secondary pivot, and that's where you see all these P2 markings like that, and that gave us another shot back up, and we couldn't quite get back to the previous high. In fact, all we did was hit the previous algo reading right there, which was the positive extreme value, and amazing how it just connected to that. And you get, again, same situation, soft return, secondary, open mouth with the green, and this is again my favorite one right there, where you get the orange skyrockets above green, steel plummets below, and you start to get the rise, and boom, it takes off from there. And then we came across, I had closed out on the previous dip down here, but then reshorted right up here. This was a little higher than that 63 range. I got in at the, I believe it was 65-ish. Well, let me look here real quick just to see where it's at. 65 even, and that was like right in between as we were doing these positive extremes. In fact, it actually went all the way up to 68, so we closed it right at 65 and a quarter, and boom, once this bar opened, we could see the snake was starting, and DOC spread at the same time, all of the configurations, and been short since that. And then you can see just a whopping nothing but collapse. We had that brief attempted buy right here as it dipped below, and then you can see the next bar, boom, the green is already almost eclipsed by the orange, and a complete rejection of cyan there. It gave another opportunity, even at the lows, to short the clean open mouth spread, and that led to, geez, even from there, that was up at 38, and we are down to 25. So powerful stuff. We're in kind of an oversold, but geez, it doesn't look like we're going to see a whole lot of bounce back in the interim. Let me expand this back up here so we can get a nice close-up of how clean that day was, though. I think it's important, even if I just get rid of the big dip here, because then it shows you how nice these waves were. Very clean, very smooth, and they all produce these little double top configurations. Here you'd have really a triple top, and then everyone gets excited on the break of the neckline concept, but we could see it a lot earlier than that taking place, and then basing and trying to find new buyers. And now we're in a really awkward time, late in the month, in October, looking for buyers to hold the market up. And it's not that things are bad, it's just that there are some concerns. So do you want to deleverage and move into treasuries that are now giving you a decent yield? And I think that becomes a real play and a drain on the market, particularly for those that have locked in some significant gains over the last year plus. So keep that in mind as you see the gyrations, but at this particular point we are still in a short. As always, though, trade well. I'll put up anything relevant on the Skype chat.